Hey everyone, and welcome to this deep dive. Today we're going to be tackling something that's been making a lot of noise in the financial world. Decentralized finance, or DeFi for short. It's interesting because it seems like you're either all in on this or you're hearing the term and scratching your head.
Yeah, and the thing is, it's not just some techie fad. It could actually completely change how the whole financial system works. Just imagine a world where you don't have to rely on the same old institutions for your money. That's the potential we're talking about here.
Exactly. And to really get into the weeds on this, we've got some excerpts from Pasted Text. It's by Kelroy James, who really knows his stuff when it comes to DeFi. So we'll be pulling from that to break down what DeFi is, why everyone's so excited, and what it could actually mean for you, our listeners. So where do we even begin with something this big?
Well, to understand where DeFi is going, we kind of have to understand where it came from. The whole concept actually came out of the Bitcoin community.
Oh, so Bitcoin was like the first step, and DeFi is building on that.
It's exactly. Bitcoin proved that blockchain tech could make a system that's decentralized and trustless. DeFi takes that idea and runs with it, creating a whole bunch of financial tools and services using that same foundation.
Okay, so it's like Bitcoin, but for all of finance.
Yeah.
Got it. But how is it actually different from how we do things now? Like banking loans, investments, all that.
The big difference is that DeFi cuts out the middleman. Instead of relying on banks or brokers or those big centralized institutions, DeFi transactions happen directly between users. It all happens through smart contracts on a blockchain.
Hold on, back up a sec. Smart contracts, that sounds like something out of a sci-fi movie.
They kind of are. But how they work is actually pretty simple.
Mm.
Imagine a digital vending machine, but for financial stuff. You put in what you want. The smart contract checks if everything's good to go, and boom, instant transaction. No waiting for approval, no mountains of paperwork.
So no more spending hours on hold with the bank. I'm already liking this. So for regular people like me, what are the actual benefits? Why should I care about DeFi?
One word. Access DeFi could open up finance to anyone with an internet connection, no matter where they are or what their credit history looks like. Imagine being able to borrow, lend, earn interest, invest all without needing a bank.
That's huge for so many people who are shut out of the current system.
Exactly. And it's not just about access. DeFi can also make transactions faster, cheaper, and way more transparent. Think about sending money overseas. With DeFi, it could happen in seconds with almost no fees, unlike the mess we have to deal with now.
Now, that's something I think everyone can get behind. But let's be real. A lot of people are still hesitant about anything crypto-related. It has this reputation of being risky, the Wild West of finance.
You're not wrong. It's smart to be cautious, but it's also important to remember that every financial system has risks. Traditional finance has its own problems too. We've all seen those headlines about bank failures and market crashes.
That's true. We've seen it all before. So maybe it's not that DeFi is riskier, but that we need to be smart about how we manage those risks.
Exactly. And that's where education is so important. The more people understand how DeFi works, the better choices they can make and the less risky it becomes.
Okay, so to recap, DeFi is about getting rid of the middleman. It uses blockchain tech, smart contracts are the magic behind it all, and there's huge potential, but we got to be smart about the risks. So what's next? Where do we go from here?
Now let's look at some of the ways DeFi is being used right now. One area that's already making waves is decentralized exchanges, or DEXs. These platforms let people trade cryptocurrencies directly with each other without needing those big centralized exchanges.
So like peer-to-peer trading, but for crypto, what's the advantage of that?
Well, the biggest thing is control. On a DEX, you hold your own private keys, meaning you're really in charge of your assets. No central authority can freeze your account or mess with your access.
So less chance of waking up to find your crypto is gone because the exchange got hacked. That's definitely a plus in this world.
Absolutely. Plus, DEXs usually have lower fees and faster transactions than the centralized ones.
Got it. DEXs. Cool. What else is going on in the DeFi space?
Another really interesting thing is yield farming. Remember those smart contracts we talked about? Well, in yield farming, you can actually use your crypto to provide liquidity to these contracts and earn rewards.
Okay, that sounds kind of like putting money in a savings account and earning interest. Is that the right way to think about it?
It's similar, but the details are different. In yield farming, you're lending your crypto to a DeFi protocol, which then uses it to do all sorts of financial stuff. In exchange for providing this liquidity, you get a cut of the fees the protocol makes.
Interesting. So it's like I'm a tiny bank lending out my crypto and getting interest.
That's a good way to put it.
Yeah.
And the potential returns can be way higher than what you'd get from a regular savings account.
High returns, huh? I bet our listeners will want to hear more about that. But before we get too deep into yield farming, let's talk about one more big DeFi application: decentralized lending and borrowing.
Now, this is where things get really interesting. Imagine being able to borrow money directly from other people. No bank involved. That's what these decentralized lending platforms do.
So it's like peer-to-peer lending, but worldwide using blockchain.
You got it. And because these platforms cut out the middleman, both borrowers and lenders can get better deals. Borrowers might get lower interest rates, and lenders can earn more on their money.
I'm starting to see why people are so excited about this. Lower costs for borrowers, higher returns for lenders. It sounds like a win-win.
It can be, but it's important to remember that there are still risks involved, just like with any type of loan. And since this is all pretty new, there's always the possibility of some unexpected challenges.
That's a good point to end on for this part of our deep dive into DeFi.
Yeah, we've covered a lot, but there's still so much more to explore. In part 2, we'll get into the nitty-gritty details of these DeFi applications and really start to see what this tech can do. So make sure to come back for more.
All right, welcome back to our deep dive into the world of DeFi. I feel like we just scratched the surface last time. There's so much more to unpack.
Yeah, we definitely did. And today we're going to get even deeper into the details of how these DeFi applications actually work.
You know, I'm still really curious about those DEXs, those decentralized exchanges. In part 1, we talked about peer-to-peer trading, but I need a bit more explanation on how it all comes together.
Okay, so let's say you want to trade some Bitcoin for Ethereum.
Yeah.
In traditional finance world, you'd go to a centralized exchange like Coinbase or Binance. They basically act as the middleman, making the trade happen and taking a fee for it.
Right, that's the way I'm used to doing things. But with a DEX, it's completely different, right?
Totally different. With a DEX, there's no middleman at all. Instead of going through a big company, trades happen directly between users, all through a network of smart contracts.
So no more big fees or having to trust a third party with my crypto. Sounds pretty good to me.
It is, and it fits perfectly with the whole idea of decentralization.
Yeah.
DEXs give users way more control over their assets, and they're more secure because there's no single point of failure.
I'm starting to see the advantages here, but how do these DEXs actually work? Are they super complicated to use?
Honestly, the tech behind them can be pretty complex. You've got things like liquidity pools and automated market makers. But the good news is you don't need to be a tech genius to use a DEX. Lots of them have really easy-to-use interfaces that make trading pretty simple, even if you're new to it all.
Okay, that's good to know. So you mentioned liquidity pools. What are those and why are they so important for DEX?
Imagine a big pool of cryptocurrency that's been put in by users like you and me. That's a liquidity pool, and they're what makes trades happen on a DEX. When you want to buy or sell crypto on a DEX, you're interacting with this pool, not trading directly with another person.
Ah, I get it. So the liquidity pool is kind of like a marketplace for crypto, but it's decentralized.
Exactly. And to get people to contribute to these pools, DEXs usually offer rewards. You can get a share of the trading fees or even some governance tokens. This is where that yield farming we talked about comes into play.
Right. Yield farming, we touched on it before, but now let's really get into the specifics. How does it actually work? What are the risks and rewards?
Basically, yield farming is about putting your crypto to work. Instead of just letting it sit in your wallet, you can use it to earn more crypto. With DEXs, you can deposit your crypto into a liquidity pool, and you'll earn a share of the fees from all the trades that happen in that pool.
So the more trades that happen, the more I could potentially earn. Makes sense. But I'm guessing the returns aren't fixed, right? They probably change all the time.
You're right. The returns from yield farming can go up and down a lot. It depends on which pool you choose, what crypto you're using, and what the whole crypto market is doing. Some pools are more stable than others.
So it's really important to do your homework and understand the risks before jumping into any yield farming strategy.
Absolutely. Just like any investment, you've got to know your risk tolerance and spread your investments around. But for people who are okay with a bit of risk, yield farming can be a really good way to earn passive income from your crypto.
It definitely sounds like something that needs careful thought and research. Okay,
Yeah.
let's shift gears a bit and talk about that other DeFi application, decentralized lending and borrowing.
This is where things get interesting. So in the traditional financial system, if you need a loan, you go to a bank.
Right.
You fill out a bunch of forms, give them all your personal info, and then you wait and wait, hoping they approve you. And even then, there's no guarantee, especially if you don't have perfect credit.
Yeah, the whole traditional lending process can be a pain, especially if you're someone who's been left out by the system.
Exactly. Decentralized lending platforms offer a totally different way to do things. Instead of banks, these platforms connect borrowers and lenders directly using, you guessed it, smart contracts. This cuts out all the extra costs and makes the whole process way more efficient.
So it's like peer-to-peer lending, but with blockchain technology running the show. But how does it actually work? If I want to borrow some crypto, what do I do?
Let's say you want to borrow, I don't know, some Ethereum. You'd go to a decentralized lending platform and create a loan request. You say how much you need, what asset you want to borrow, and what interest rate you're willing to pay.
Got it. So I put my request out there, and then what? I just sit around and wait for someone to accept it.
Yep. On the other side, you've got lenders. They want to earn some returns on their crypto, so they look through those loan requests and pick ones that look good to them. If a lender decides to fund your loan, the smart contract kicks in automatically. It sends you the crypto and sets up all the terms of the loan.
Wow, no more waiting on hold with the bank, no credit checks, just a simple agreement between me and the lender.
That's the idea. And because it's all automated with smart contracts, there's much less risk of fraud or people not paying back their loans.
That's a huge plus. What about the interest rates? Are they usually better than what you'd get from a bank?
It really depends on a lot of things. The asset you're borrowing, how long you need the loan for, what the market's doing. But in many cases, decentralized lending platforms can offer better interest rates than traditional lenders, especially for people who might not qualify for a bank loan.
So it's potentially cheaper for borrowers and more profitable for lenders. It sounds like a win-win situation.
It can be, but we got to remember, there are still risks with decentralized lending and borrowing. Just like with any loan, there's always the chance someone won't pay it back.
Right.
And since this is all relatively new, there could be some unexpected issues that pop up.
Right. It's always good to be cautious and do your research. So we've talked about DEXs, yield farming, and decentralized lending and borrowing. Those are some pretty powerful examples of how DeFi is shaking things up in the financial world.
They really are. And we've only just begun to explore the possibilities. In the next part, we'll dig into some of the challenges and bigger implications of DeFi, and we'll look ahead to what the future might hold for this game-changing technology. So make sure to stick with us.
And we're back for the final part of our deep dive into the world of DeFi. Over the last two parts, we really dug into what decentralized finance is all about, explored how some of the coolest applications work, and, even started thinking about how this could change things for everyday people like us.
Yeah, it's been quite a journey so far. But now we're at the big question. Is DeFi really the revolution everyone's saying it is? Is this really going to change how we think about and use money forever?
Right, no crystal balls here. But let's try to figure that out. What are the things that will decide if DeFi actually lives up to all the hype?
Well, one of the biggest things is adoption. For DeFi to really revolutionize finance, it can't just stay with the early adopters, the techie people. It needs to reach everyone, mainstream audiences.
Yeah, it can't just be this niche thing for crypto fans. We need to see regular people using DeFi, businesses using it, even governments getting involved.
Exactly. We need widespread adoption across the board.
Yeah.
And for that to happen, we need more than just user-friendly apps and platforms. We need clear rules and regulations from governments. And most importantly, people need to understand how DeFi works.
So education is key. People need to feel comfortable and confident using DeFi. And that comes from understanding the tech, the benefits, and the risks too.
Exactly. The more people know about DeFi, the better decisions they can make and the safer it becomes for everyone.
Okay, so let's think bigger for a second. If DeFi really does go mainstream, what could that look like in our everyday lives? What would change?
Imagine a world where you're truly in control of your money and your financial information. You could send money anywhere in the world instantly with almost no fees, no matter where you live or if you even have a bank account. You could access all kinds of financial services without needing permission from those big institutions.
This sounds amazing. It's like everyone gets a fair shot, no matter who they are or where they come from.
That's exactly it. DeFi has the power to make finance more democratic and open to everyone. It could give individuals more power, make the financial system fairer, and even lead to innovations we haven't even thought of yet.
It's a pretty exciting vision, but let's be real for a second. We're talking about completely changing the system here, and whenever that happens, there's going to be pushback.
Oh, absolutely. Those traditional financial institutions, they've been running things for a long time. They're not just going to give up control without a fight. We can expect to see them resisting, trying to regulate DeFi, maybe even trying to make it part of their own systems.
So it's not just about the technology itself. It's about the whole social and economic landscape, the politics of it all. It's about finding a way for DeFi to work for everyone.
Exactly. And that means having open conversations, working together, and being willing to adapt. We need to find that balance between letting innovation happen and making sure there are rules to protect people.
As we wrap up this deep dive into DeFi, one thing's really clear to me. This is more than just some new tech. It's a movement, a whole new way of thinking about finance. It's about making finance more accessible, more transparent, and fairer for everyone.
I love that way of putting it. DeFi represents that desire for control over our own money. It's about creating a system that benefits everyone, not just a select few.
So to everyone listening, stay curious, keep learning about DeFi, and don't be afraid to explore what it has to offer. The future of finance is being shaped right now, and you can be a part of it.
Thanks for joining us on this journey into the world of DeFi. We hope this deep dive has sparked your interest and made you feel more confident engaging with this amazing technology.
Keep exploring, keep learning, and never stop believing in the power of innovation to make the financial world a better place for all of us. Until next time, this has been The Deep Dive.